Hey everyone, my name's Andy. I run the Finding Value Finance channel. Today I have with me Terry. He is a uranium expert. I wanted to get his idea on uranium, and I'd like to thank him for being on the channel. Thank you for taking the time to be on here, Terry. I appreciate it. We'll jump right into it. Can you tell us a little bit about your background, who you are, what makes you so drawn to uranium, and kind of your background with uranium investments?
Sure, Andy. Thanks for having me on. I started, well, my career, I was in education. I started as a teacher, and then I did a stint for about 6 or 7 years in financial planning. And then I went back into teaching. And then my career evolved from there, and I retired. I've been retired now for 3 years. And when I retired, I was a superintendent of education here in Sudbury. I've always been drawn to investing, learning about financial markets, how everything works. That's always fascinated me. So I've been a student of the markets since I started in financial planning in 1996. And in that period of time, I've spent a lot of time, doing research on different types of investments, and I've noticed certain patterns that repeat, cycles or echoes or rhymes, whatever you want to call them. I've seen, and noticed where there were bubbles, where it couldn't last. It had to bust sometime, and it did. For example, the tech bubble at the end of the 1990s. Early 2000s. And I've also seen the reverse, where I saw gold at one point where it was $250 an ounce, and thinking to myself, it can't stay like that. It's got to go back. It had been to 800 before. People were saying it's going to go back, and it did. Around 2008, it went back all the way up to almost $2,000 an ounce, and then went all the way back down again to about 800. So you see these patterns. And I remember in the 2005, 2007, I remember the uranium bull market. I didn't participate, but I remember it. And I was thinking to myself, kicking myself in the rear, saying, why couldn't I have seen that? And why didn't I participate? But anyways, lo and behold, that went away. And then as a student of the financial markets, I got interested in uranium. In 2016, I was watching a financial network, and they had an analyst there talking about a company. And what he said about that company was exactly what I like. He talked about, great company, great management, great assets. He was talking about Cameco, great jurisdiction, great mines, everything was just great. But the stock, then he says, but the stock is just have suffered and suffered because it's been in a bear market. And it's just, so that was like, ooh, this is value to me. There's a company there that has everything is great about it, but the share price is down. So that's my style of investing, trying to find value, just like your channel. And when it comes to investing, one thing that I learned when I was in financial planning, and still just talking with people, is that a lot of people they're good consumers. So if you buy groceries and you like the specific kind of canned soup, and that soup is usually $2 a can, and they walk into the store and there's a sale on that soup, it's 50 cents. Well, what do people do? They load up. It's great soup, it's cheaper, it's better to buy more now than when it's more expensive later. So they're good consumers when it comes to consuming, but a lot of people, when it comes to investing, do exactly the opposite. When that great soup like Cameco is on sale, it's like, oh my God, the world's going to end. They're going to go bankrupt, blah, blah, blah. I don't want to have anything to do with it. They don't touch it. But you've got companies like, I'm just going to say it, Tesla right now, where the valuation is absolutely crazy. It's a bubble. There's no way the company is worth that much money, but just because people are keep putting money in it, and they just keep riding and growing that bubble and growing that bubble, and they're making money. They think they're the smartest people on the earth, smartest investors on earth. And then that bubble eventually crashes, and that's where you get hurt. So that's my style of investing, and that's how I got into uranium. Long answer.
Yeah, and what do you normally do in your spare time? Do you research in uranium, like articles, investments? Do you attend Camco conferences and go on that? Like what makes you so interested in uranium, and what do you do to continually research it?
That's a great question. Yeah, so that's exactly what I do. So I've been happily retired since 2019, but before that, I when I got interested into Cameco, there wasn't in 2016 and uranium, there wasn't a lot of information out there because we were right in the smack dab middle of the uranium bear market. So at that time, I got information. I started to go on the website. So Cameco website, they had a lot of great articles. They've got for you new uranium investors, there's a spot on top of the Cameco's homepage that says uranium price. You can go click on that, then you'll see the historical spot price and term price. And at the beginning, I didn't know what spot was and term was and didn't understand any of that. But that's how I started. And then YouTube was very good. I just punched in uranium, and then on Google punched in uranium, then got a bunch of uranium company names, then went on their website, started reading their investor presentations and looking at all their information, and started doing research on that. And then eventually there started to be a little bit more information that came out, but it was in drips back then. So, one of the best videos that I watched, and it's still available, it's a talk that Mike Alkin gave in January, I think it was January 2017, it was on uranium. He was smack dab right on, like he predicted everything that we're seeing now. Everything we're seeing now, Mike Alkin said it was going to happen, and it's exactly happening. So a lot of us owe a lot of good things that happened to us because of the research that Mike Alkin did. But anyway, so that's how I did it back then. And I spend probably 6 to 8 hours a day on average reading and trying to find any information I can on uranium. There's a good community on Twitter. I'm sure people follow John Quakes at Quakes99. He's awesome for putting out information. Justin Hume, Uranium Insider. So all these people put out information that, you read it, you look at it, you view it, you double check it, you go on the company websites, you do your information on the companies. I drop in the offices of some of the companies that I, unannounced, just to see, are you guys really doing what you're saying you're doing, or what? And I also call a lot of these CEOs myself, or text them on a regular basis. So that's the kind of stuff I do to stay on top of my investments. And the passion for uranium, well, like I said, I believe I found a sector that is going to provide tremendous gains in the short to mid-term. And when I first started, I thought it was going to take 3 to 5 years. And when I started investing in 2017, and I told anybody that would listen, I told them, I said, I think it's going to take 3 to 5 years. And I think that conservatively, we could do 3 to 5 times our money in that time period. Well, I was right. However, I was hoping it was going to be quicker than that. So like this year is my 5th year of being invested in uranium. And so far my portfolio has grown. It's been a 3-bagger so far. At one point it was more than that, but we've seen a lot of gains washed out in the past month. But the great part of it is that it's just beginning. It's going to be, it's just on the cusp of breaking out to where I think people that are well positioned are going to be very happy with their investments.
So looking at kind of the previous uranium bull markets and where we are today, kind of where would you describe where we're at in this bull market? Are we, you're saying we're kind of in the beginning, but are we like first inning, second inning, third, fourth, fifth, sixth? Yeah. Like where would you say we're at in this bull market? Yeah. If you were to take a guess.
If you look at the long term, well, if you zoom in like on that Cameco website, as I mentioned, and you click on uranium price, you'll see there that you could actually manipulate the time period that you look at for uranium. So if you zoom into the period between, let's say, 2005 and 2008, where we saw that big spike in uranium that went from $9 a pound to about $140 a pound approximately in 2007, we're just on the beginning of the rise of that price curve. So I think that we're probably somewhere around the third inning because money has started flowing in, especially since the fall of 2020. That's when things started to happen. And other things have happened this year, which have been very, very positive that we'll talk about in this video. But I think that we're probably around the third inning of a nine inning game, and
Okay,
probably
so
the top of the third.
we're relatively early then, and the valuations are still very low then, is what you'd say.
That's my assessment.
Okay. And looking at this for this bull market that's coming up, obviously we're in the third inning. What's your strategy for investing in this bull market to capitalize on it?
Well, what I did is when I first started out, like I said, I was just dipping my toe, and I was really interested in Cameco at the time. And Cameco is a great company. It's one of the two blue chips, I'd say, in the uranium sector, with the other one being Kazatomprom. And what I did at that time is, I was sprinkling my money, and then I just got into too many positions. I was in about 21 positions at the time, and it was a lot to manage. And, so I just wanted to pare it down. And then my knowledge got quite a bit better as well. And I had a better understanding of it. And I was a lot more comfortable with investing in the sector. And I understand the risks fairly well. So I changed my strategy. And what I did is I looked at, there's a report that Sprott prepared in, I think it was early 2007, just before, when the price of uranium was about $70 a pound. And what they did is they put out a report on a bunch of uranium companies in the uranium sector, and they were predicting that the price of uranium could hit $100 a pound by the end of the year 2007. And actually, well, they were wrong and went to $140 a pound. And what happened was, the valuations of those companies just blew up at that time because there's very few uranium companies. So when money flows into the sector, it's like crazy. Doug Casey says it the best. He says when money flows into precious metals, it's like trying to force the contents of Hoover Dam through a garden hose. Now, what we need to understand is that there's 1,500 precious metals, junior precious metals companies. So there's a lot of places to put that money in, and it still blows up. However, when it comes to uranium, there's only about 60 uranium companies, juniors right now. So he says that it's like trying to force for a uranium bull market, it's trying to force the contents of Hoover Dam through a straw. So it's like, so the valuations absolutely go crazy. So that report, to go back to that Sprott report, they also did a write-up on about 40 different uranium companies, or maybe 30. And so when you look at those valuations in those companies, like you're looking at valuations here, like 300 million, 400 million, a billion. Like some of the companies that are valued maybe at about 100 million right now were valued $1 billion in 2007. And that's before the price of uranium went to $140 a pound. That's when it was $70 a pound.
Oh, wow.
So my strategy was, okay, I understand the risk here. I want the most pop for my money. So I shifted more of my money into explorers. Now, I know that a lot of people are going to write comments about that, and explorers, it is speculation because they have no revenue. They're trying to find a deposit. It's not investing, it's speculating. You're speculating that they're going to find something. However, when you look at explorers in 2007, in that Sprott report, their valuations were 400, 500, 600 million dollars, just because they had uranium on their name. So, and a lot of those companies don't even exist anymore. So, now the companies that I positioned in, they toughed it out through the bear market. And during that bear market, they were able to acquire some interesting projects and great properties in the Athabasca Basin. So, and they made it through. They didn't go bankrupt. So I don't think that they're going to go bankrupt now. Money is flowing into the sector. they're able to raise cash, they're able to explore. So that's been my strategy. My strategy has been to put the majority of my portfolio in 7 to 8 quality exploration names in the Athabasca Basin. I also own two, one producer, well, past producer, and one developer in the United States. And I also have 2 developers in Africa. So that's my portfolio. I'm comfortable with that. I think that that the way that it's positioned will allow me to get the greatest amount of return with the amount of risk that I'm willing to accept. But at the same time, though, if one of those explorers, just one of them, happens to hit a deposit, a significant deposit that that's mineable, then that one company, the returns are going to be phenomenal. So, and right now there's a couple of them that are looking pretty attractive. They've had some pretty good results lately, so I'm pretty excited for a couple of them. So that's been my strategy.
Would you be willing to share those names at all, or of which ones may look quite attractive to you?
Well, I just did an interview last week with on Streetwise Live about Baselode Energy. So Baselode, they drilled a hole. They were exploring on their Hook Lake property, and there's a company that holds a claim just to the north of them, called 92E. And they plopped in a hole and they hit uranium, and it was about 225 meters from the boundary of Baselode's property. So when Baselode learned about that, what they did is they decided to take a drill, go south of that boundary to see if that strike length follows onto their property, and it does. Actually, they hit a thicker layer of uranium. There is some high-grade uranium of over 1% in that intercept. And so what they did is when they saw that, then they fanned out their drills. So they drilled 3 other holes from the same location but on different angles. And so they're pretty sure that they've hit uranium in those as well. So that means that there's something there. There's some sort of system there with uranium. The grades are not Athabasca Basin crazy levels yet, but there might be something there. So they're going to go back in this January. They're going to go test that out, and if the results come out positive, then we might have something interesting there. And by comparison, if you want to see what could happen to the valuation of that company, take a look at ISO Energy. So I was buying ISO Energy. Actually, the first time I wanted to buy ISO Energy, the price of the share was 18 cents. And I said, it's going to go down. It went up to 22 cents. And I said, it's going to go down. And finally, it never went down. So I first bought ISO Energy at 40 cents a share. And they're sitting at, I didn't check today, but so you see the valuation, the market caps of those companies get rewarded if there's a discovery or a potential discovery. So, and like I said, when money starts flowing into this sector, it's like trying to force the contents of Hoover Dam through a straw. So I think that almost all boats are going to be lifted. And these companies here that I'm invested in, they've toughed it out through the bear market. So I think they're going to do well in the bull market.
Yeah, I think Baselode's, catching on to something too. So I think it's definitely a good one to look at. Definitely.
Can Alaska came out with good results as well.
Yep.
Sky Harbor hit uranium. So there's a few of them that have potential.
Yeah, the way that I play it is I spread it out amongst all those, just like yourself. So that's the same way I do it. Where do you think the best value is in terms of companies at this moment right now? What do you think's a compelling one? And maybe you've already hit on it a little bit, but.
Well, I think if we look at the volatility, I think this sector is extremely volatile, as we've seen, especially since this summer. Like we saw a run up from mid-August to mid-September that was phenomenal. It was fun to watch, and then we saw a correction. Then we saw another short run up. Then we saw another correction. Then we saw another run up in November, early November. And then since around the second week of November, it's been a sell off. So we've been on a month to 5 weeks sell off here. So the reason why I'm saying that is because the smaller caps are more volatile from what I've seen. So, you know, when money flows in, because they're smaller, they have lower share count, you know, when money flows into that company, especially a company like ISO Energy, because even though they've got around 100 million shares, NextGen Energy owns more than half of those shares. So there's very little of those shares that are traded. And it's the same with Baselode Energy. The org QC Copper and Gold used to own 18 million shares. They sold off some of those shares, but those are diamond hands. So when you've got a company that has low market cap, low share count, and then money wants to go in, it's extremely volatile. So it's volatile going up, which is beautiful to see, and it's fun, but it's also more volatile going down. So that means that, you know, you need to have a strong stomach to be able to take this extremely bumpy ride. So I'm seeing, to answer your question, I'm seeing value for my investment style in this smaller cap, the exploration companies right now.
Okay. And looking at this bull market, where do you think the uranium price could potentially go in terms of ultimate peak? Do you think this is, and what does that look like? Not just an ultimate peak, but is this going to rocket higher, like almost like a short squeeze type movement, and then roll over, come back and stay at a higher level? Is this just going to be a grind higher kind of slowly? Are we going to cycle up and down as we go up? What type of movement, or what's your expectations, or what do you think this market's going to do going forward in terms of pricing and how that is going to look like? And maybe it deals with contracts, maybe it deals with spot market, maybe it deals with Sprott or whatever it may be. What do you think that might look like?
Well, we got a we got a very good taste of what it might look like from August to September. What happened there, I'm sure you've spoken to it, and probably your audience already knows about this, but I'm just going to talk briefly about this. The Sprott Physical Uranium Trust, they started their at the market purchasing of uranium around mid-August. At that time, just before they started buying, the price of uranium actually went down, and it was at approximately $30 a pound on the Friday before Sprott, let's call it Sprott, started buying. And so Sprott, they had an at the market facility of $300 million when they started buying their uranium. And we saw the price of uranium rise very quickly in about 3 weeks, from $30 to about $52 a pound. So that's a 65% increase in the price in about 3 weeks. So, and then the price of spot uranium went kind of down, and then it went sideways and went up, and that now we're sitting at about what, $42 a pound right now. Okay, so I think there's rational explanation as to why that occurred. No one knows for sure. However, I think that Sprott has kind of taken their foot off the pedal in terms of buying uranium from the spot market. I think they've developed new ways of acquiring uranium without actually having to go and put some bids on the spot market. They're able to acquire uranium in other ways that's not directly affecting the spot price. And I think there's a rationale for that. But in terms of where the uranium price is going to go, I think it's going to go like once Sprott, once money starts flowing into Sprott again, and it will, and they start aggressively buying uranium again, I expect the price of uranium to kind of shoot up dramatically like we saw in September. Now, if for them to be buying on the spot, and if they're the only buyer, that's going to have an impact that could be short-lived. However, what's also going to occur in the next year or 2 or 3 years is that utilities need to come back and start purchasing and writing contracts. In 2020, only 74% of US utilities were covered by contracts. In 2021, that amount went lower. By 2025, it falls off a cliff. So the utilities that have, they've got uranium coming in, they've got these agreements that they're not worried in the short term. However, once these contracts roll off, then, they need uranium to come from somewhere. So they need to start writing contracts again. When that happens, that's kind of a signal to all other utilities that, listen, the past 4 or 5 years, we were able to, if we thought that we needed a certain amount, it was easy to get. We had access to the spot market if we needed like, I don't know, 50,000 pounds or something like that. Or we also had access to the carry traders, where they were able to kind of take care of obtaining uranium for us and delivering it in a relatively short period of time. So we had access to that. We also had access to underfeeding because the entire uranium fuel cycle was kind of broken. So these machines that were built to enrich uranium, they didn't have feed coming in, so they could keep the uranium in there longer, spin it longer, and then squeeze more juice out of that orange, right? Instead of squeezing quickly and then throwing the orange out because you needed to bring more oranges in. Now, they've been able to kind of really squeeze a lot of uranium in that enrichment process through underfeeding. Well, once that whole cycle begins again, they won't be able to underfeed. So they're going to lose access. There won't be any pounds on spot anymore. On the spot market, the carry traders are going to be sort of, searching to find pounds themselves, and underfeeding is going to go away. So the only place they'll be able to obtain their uranium is from the producers. So they need to write contracts. They understand that. Once they see that other utilities have figured this out and started writing contracts, the first utilities that come to the table, they're going to get the best deals. So we heard actually a CEO of a company that you and I were talking about just a while ago, GoVX, Daniel Major, talked about a contract that was written recently. Now, I don't have the details on that contract. I'm just going by what Daniel is saying, is that normally utilities will want like a fixed price. They don't want the price to go way higher than what they can control, because they know that these prices can go very high very quickly. Well, this contract is all market driven price, but with a ceiling. So the first 2 years of delivery, the utility will be paying $55 a pound for the first 2 years, which is quite a bit higher than the term price that's being reported right now of about $43, $44 a pound for the term price. And the next years, I think it's 2 years or 5 years, is at $78 a pound. So again, $78 a pound term price is it's almost 100% higher than what it is actually right now. So what is that telling us? That's telling us that the utility understands that the price has to go up and will go up, and they're willing to pay, to sign a contract with a ceiling price, because they understand that the security of supply might be at risk in the future. So it also says that the producer understands this as well. The producer understands that the price is going up. So once utilities see that contracts are being signed and some of the prices where those contracts are being signed, then the other utilities will say, oh, I need to get in this game because our contracts are rolling off in 2025. Well, we need from 2025 to 2035, our needs, we need to secure that supply for that 10-year period of time. So we need to sign a contract. And, and now the producers that have been idled, like Cameco, Kazatomprom has extra, and then you have other producers that just kind of shuttered production, until this thing wakes up again. They're going to be wanting significantly higher prices. So I think that this is a long answer to your question, but I think that the price is going to be sustained. I think it's going to go up. And then because, there's a lot of contracts that need to be written in the next 3 to 5 years, I think that price is going to be sustained for a longer period of time. Now, when you couple that with the fact that nuclear energy is growing at 2.6% per year, that's kind of the base case scenario. That's not taking into account a whole bunch of news that have come out and releases, press releases that have come out recently with regards to France embarking on a new nuclear build out. England is also building out. China, well, China is driving this. Canada, just today, there was an article where Ontario Power Generation, they've got a deal with GE to build a small modular reactor here that's brand new. And the advent of these small modular reactors, like, I mean, a whole bunch of companies and people are embarking on this. Rolls-Royce is embarking on this. Bill Gates, with his company TerraPower, has partnered with Warren Buffett to build a small modular reactor in Wyoming. So, I mean, the future is very bright for uranium. So, which is why I don't think it's going to be a pop like we saw in 2007. I think it's going to be a nice pop. And I think it's going to be, it might come down, obviously, if it goes too high, and I think it's going to maintain itself quite a bit higher for a few years. So it's going to be a nice run, I think.
Yeah, I agree. I see those deficits out there in terms of market deficits, and I think it will remain quite high. Here's something that I was thinking of just as you were talking, and maybe we can kind of throw this back and forth. I know that Sprott they have control over the physical market, the SPUT. Then there's in talks about them taking over URNM, the uranium ETF. Now, if they were to drive the spot price far higher, would that have an impact on contracting? And how does the impact on the contracting affect the shares in URNM and the companies? So could they drive the spot price effectively, driving the contract prices far higher for all of their holdings in URNM? Is that a fair statement?
That's exactly what I believe would happen. So in terms of the impact of that split would have on contracting, that's one of the goals, of split is price discovery. During the bear market, there was very little activity on the spot market, maybe 20 million, 30 million pounds exchanged per year on the spot market. And utilities, even though they can purchase from carry traders and on spot, they're reluctant to deal on the spot market. They do when they have to, but a lot of their existing contracts has two components to it. Part of the price that they're paying for uranium is based on a fixed price that they've negotiated with the producer. But the producer also wants, to be able to enjoy the upside. So there's also a portion of it, a percentage of the price that's tied to the spot price. So the higher the spot price goes, the more that the utilities have to pay for the materials that they're receiving today or this year, for example. So they're kind of cognizant of the fact that if they're too active on the spot price, it's going to drive the spot price higher, which is going to have an impact on the uranium that they've already contracted for. So yes, so that's kind of the impact that split is going to have on the term contracting price, because again, when the utilities see that these prices start ticking up, that means that it signals that there's not as much product, there's not as much uranium as maybe was anticipated, and there might be future supply shortages. And we need to ensure, like, they've spent billions and billions of dollars to build these reactor fleets. They want to keep, the only way they can recoup their investment or part of the investment is by generating electricity from these units. And that's how they recover their costs. That's how they make a profit. So they need to keep those reactors operational. So that's the first part. Second part is, absolutely. So Sprott is sitting in just a wonderful position right now, because they've got a vehicle that allows them to buy the physical and have an impact on the price of the physical uranium. And the equities, the uranium equities, they react a lot with regards to the price of the uranium. So right now, the price of uranium has kind of been stuck going down and down, like ticking down slowly. Well, our equities are going down. But like we saw in August and September, when the price of uranium started shooting up, our equities shot up like, and to a beta to that. So if this goes up 50%, well, our equities went up 100 and 120% in that period of time. So the equities react a beta to the actual physical uranium. So Sprott, brilliant move. They acquired Uranium Participation Corp. So they started controlling Sprott, which was the old Uranium Participation Corp in July. They tested the water. They had $300 million at the market. They started buying uranium. Like I said, we've talked about it. They drove the price of uranium up very quickly. So now, and they've seen the effect on the equities at the same time. What do? Well, they write a deal with North Shore to take control over URNM, which is Uranium Miners ETF. The shareholders are going to vote on that in February 2022. So once that they take control of URNM and the equities, they can market that to their clients. They have over 200,000 clients in the world. So I think that what they'll want to do is they'll want to take control of URNM before they put their foot on the pedal again and start aggressively buying uranium, so that their shareholders and they as a management team will be able to reap the rewards of uranium price going up and equities going up. So they've got as they purchase uranium, their shareholders in their split ETF are happy because the price of uranium is going up and the shareholder value is going up. And at the same time, they'll be controlling this vehicle that holds uranium equities, and they'll be making money here too. So they're sitting pretty right now.
Here's another question, and maybe this is just, I'm not a uranium expert, but have you ever seen a contract that someone had made that was lower than the spot price? Or has it always been at spot or higher?
Well, in honesty, I've never seen a contract. What we've seen are examples of conditions in contracts, and like when I listen into the chemical conference calls and you look at their financial statements that they issue quarterly, they'll talk about how they try to arrange their contracts where certain percentages fixed, so we've seen people provide information in general terms without actually seeing specific contracts. So I can't answer your question because I've never seen an actual contract.
Yeah, the only reason I'm asking is, let's say Sprott sets the URNM up. They've got their spot, their physical arm or division or spot. They get everybody loaded up in the uranium equities. They start buying off the spot price to test to see how thin the market is. They'll test it, and then they'll say, all right, guys, now's the time to jump. So they load up on the equities. They completely attack the physical market because they know it's thinly traded and blow this through the roof. You think that's a scenario that could potentially happen, or do you think it will happen?
Listen, like they're not there they're not there to bring peace to the world. They're there to make money for their shareholders, right? And if I was to me, this is an absolute no-brainer to me. Like if I was in their shoes, and they're brighter than I am, that they've done a brilliant job so far, that's how I would play it. Let's take our foot off the pedal here for a little while. Let's continue accumulating uranium in different ways here without specifically affecting the spot price. Let's take control of URNM. We've seen, they've already seen it in August and September, and these guys have been around for a long time. They were involved in starting Uranium Participation Corp. They participated in the last uranium bull market as well. So they know what's going to happen here, and they've seen it, how quickly and how dramatically it happens in August and September. So that, to me, this is a no-brainer to them. let's take the foot off the pedal. Let's obtain control of URNM. Let's pitch this, market this to our clients. Let's load up in the equities here. And then let's list on the New York Stock Exchange, because we haven't talked about that yet. Let's list on the New York Stock Exchange and increase our ATM, and then start putting our foot on the pedal again. And that's going to me, this is like to me, this is the scenario that should play out.
Basically, it's the checkmate scenario. They scoop up everything in the background of physical pounds. They get everybody loaded in the equities, and they say, we get New York Stock Exchange. They get all this capital come in, and they say, it's go time. Boom. So we as investors should be positioning accordingly. Now, when we think about this, are you trading in and out of these stocks, or are you taking positions and holding on? What's kind of that strategy that you have there?
I'm not a trader, so I have not been trading in and out, and that's had implications for me. Like, one of the implications is the opportunity cost. Like, if I had invested in whatever other sector in 2017 instead of starting in uranium, well, there's other sectors out there that have done well. I may not have done 3 times my money. I may have done more, but those are all ifs and buts scenarios, and I can't go back there. Now, I don't trade in and out, and I don't try to time because I think it's extremely hard to do. First of all, and I'd like to hear about what other people are doing, like if they're having any success at it, which they might, which is fine. But I mean, I'm just I've got my eye on the prize, and the prize for me is the price of uranium. The price of uranium is going much higher. How high? It's impossible to predict, but let's just put this in context. The last uranium bull market was in 2007. So we're entering into 2022 here. That's 15 years ago. Okay. Now let's try to compare valuations of companies today to companies 15 years ago. So if these uranium companies, like, valuations in companies today some of them are insane. I'm not talking about uranium. I'm just talking about general market, are insane. Compared, and try to compare the valuations of their companies to their peers or whatever in 2015. Like, it's multiples higher. So let's just use 2007 numbers like as our baseline. The market caps of these companies are going to go pretty high. So I think that the returns are going to be pretty spectacular.
So you're buying and holding. That's exactly what I'm doing.
I'm buying and holding. Sorry, I lost my train of thought there. But yes, I'm buying and holding, because that's my eye on the prize, is the price of uranium. And if the price of uranium went to $140 a pound 15 years ago, it's safe to assume that it could go back to the same price as a minimum.
Yeah, our money supply has gone up far greater. It's probably gone up 3 to 5 times since that time frame.
Right. And the setup.
Yep.
And the conditions and the setup right now are like way better than they were when they were in 2007. So, but let's just take the most conservative scenario, which is, can we hit the 2007 highs? Easily. I think easily.
Okay, that's good. Now, let's take the converse. We'll flip it here and say, what are some of the risks in this uranium market? What could happen that could derail it? Is there anything that you've read or seen that could derail this market?
Yeah, so obviously, and I know that we were talking about that before recording, but a lot of people ask me and probably ask you, what's going to happen to uranium equities if there's a broad market sell-off or a crash. Valuations in the general market right now are insane, like insane. To me, there's a bubble. It's a bubble again. And I've seen it over and over and over, but right now it's still euphoria. People have made money, but that bubble is going to burst. It happens all the time. So when it does, like, money flows out of the market, and yes, that would include uranium equities as well. We saw that in March of 2020. There was 2 or 3 or 4 days of sharp declines there. Well, the same thing, we saw sharp declines in uranium equities as well. However, I think that because of the fundamental story and the thesis behind uranium, I think that uranium equities are going to recover. It's good. People are going to see this as a great buying opportunity, and they're going to recover. So the first risk is a general market sell-off or a crash. Uranium equities people are going to leave the uranium sector just like any other sector. We're not immune to it. The biggest risk, in my opinion, is if there's a nuclear incident, God forbid, or heaven forbid, or because they're pretty, it's catastrophic. So, however, you have to consider what kind of nuclear incident. If it's an interruption or a close call or something like that, then I think the impact would be short term. If it's a major nuclear meltdown, then I think it depends where it is. If it's in an isolated reactor, and what happened in 2011 is when there's a meltdown in Fukushima, what happened is Japan shut down all of their 49 nuclear reactors at once because they had a huge earthquake. So they needed to make sure that all these facilities were still, secure. So, but you need to check this. So you need to shut everything down. That's 49 nuclear reactors. At that time, that was like 20% of demand. Mm-hmm. So, and what happened is nobody thought that they'd stay shut down this long. So that's 2011. We're talking about 10 years ago. Now they've restarted some of those, and there's calls for them to start up more. And especially with this energy crisis that we're seeing now, and especially that's going to get worse over the winter, we're expecting more nuclear reactors to start up, and maybe faster, the pace of those startups to be faster. But Germany went down the same road. So they announced that they're going to shut down all their nuclear reactors, and they went on this renewable wave. So if it's something catastrophic where, a country decides to shut down all of their nuclear reactors, that would have a major impact on our thesis and on our sector. If it's just one-off, where I think it would be just a short-term impact, I'm talking about financial, not environmental, obviously, then to me, that's the biggest thing. The biggest risk would be, let's say the Chinese, because they're the ones with the biggest build out. They're building them out, fast. It's mostly the same models that they're building. They're operating those models. If they find out that there's a major flaw in that model and they need to, put the brakes on that and maybe shut down those models, that would be a tremendous risk. That, to me, that is the biggest risk to our sector.
And do you keep any cash on the sidelines for a stock market crash, or are you worried about that happening, or do you kind of just cost average in, ride through it, and if we see that dip, we're just going to go through it and ride through it? Like, what's your thought there?
No, I know that the prudent thing to do is always have cash on hand, but honestly, each time that I had cash, I was looking for opportunities to buy, and I'm fully invested. But as new cash comes in, I don't keep it as cash either. Like, I look for opportunities like we have now, where we've seen a pretty steep 30 to 40% correction. I buy.
That's what I do too.
Yeah,
I buy and I hold on. Yep.
Yeah, I buy and hold on because I'm just, like I said, and there's another thing I'd like to say about the risks is that just like aviation or anything else, as we're progressing along as a society and with technology, I think that the checks and balances are getting better, as we're going along. So nuclear generation is probably the most regulated industry on the planet.
Mhm.
So, and then you've got multiple bodies that regulate and check, and then they'll come in and they'll check the insulation. And I think I think we're just getting much better. And so I think that there is a risk, but I think the risk is lower than if you think in the 1980s with Chernobyl, like, and that was human risk. It was stupidity. It was pride. It was like a whole bunch of stuff. And and the technology, it's like comparing, like one of the first 1930s automobile to what we're driving today. It's just, it's not comparable.
Okay, and I've got another question here. If someone didn't have a lot of capital and they wanted to enter the uranium market, how would you approach that? And what I mean by not a lot of capital, if it's like $10,000 and maybe that's all they have is $10,000 and that is what they have saved up and they want to invest in the uranium sector, how would you approach that if you had $10,000 to invest in total in the uranium sector? Would you put it all in it? And I know that you're pretty uranium bull. Would you put some of it in it? What would be kind of, and again, this isn't advice by any means, it's just an opinion. So what would your opinion be on that type of scenario there?
Well, like I said, I was in the financial planning business before. And so that person needs to, like, that's a pretty general question. You need to know, like, what's the purpose of that money? Like, do you need it in a year's time? Do you need it and do you need it to be $10,000 or is this like something that you're willing to invest or speculate on, and you can, like, if it goes down to $5,000, how are you going to react to that? That kind of stuff. So that's a pretty general question. So the person needs to really do kind of that introspection as what's the purpose of the money? If the value goes down, am I comfortable with that? Am I going to want to sell? And it's easy to do. And it's easy to say beforehand when you think everything's going to go rosy, but trust me, it's not. Most of the time it goes down. You have to expect a 50%. If you're not comfortable with that ride, then you can't start buying or speculating into explorers. You might want to go with a blue chip such as Kazatomprom or Cameco, something that's a little bit more solid, and you're not, you understand that the gains are not going to be exponential. That's another thing you need to ask. What kind of returns are you looking for? What's the purpose of this money? So my not knowing any of that, I would probably say that if something that's kind of a little bit more safer, more sure, I'd be looking at two products. Number one, SPUT. So the Sprott Physical Uranium Trust, where you're putting your money into the actual physical uranium, and as they resume buying, the price of uranium is going to go up, and then the unit price. This is all theoretical, of course. We've seen it happen, but that's kind of what we're thinking is going to happen. And the second would be a uranium ETF, like the North Shore Uranium Miners ETF, URNM.
Yeah, I agree with that definitely, because it's tough to speculate on individual companies, because if one thing happens, it can wipe out that capital and you can't recover from it. So that's, definitely. So that's all the questions that I have for today. Do you have any last closing comments or anything that you'd like to share on the uranium market that you'd like to disclose? Or
well, there's maybe just one little thing that I wanted to touch upon that I haven't had the chance to yet is let's go back to SPUT. So let's go back to what they've done so far. So they started buying with 300 million. Their ATM was 300 million when they started. And they went through that pretty quickly. What they did, and everybody was speculating on Twitter, okay, what's going to happen when they run out of money? How many days is it going to be before they can resume buying again? And well, they didn't wait for the $300 million to be completely exhausted. They applied, and they were able to increase that 300 million to 1.3 billion before the money ran out. So then they had 1.3 billion to buy uranium. So they've managed to spend about 1 billion. They bought about $1 billion worth of uranium since that time. They've grown the amount of uranium to about 41 million pounds in the ETF total uranium that they hold. And so now people are speculating where they're coming to the end of the 1.3 billion. What are they going to do? Well, we got our answer in mid-November. They increased that to 3.5 billion. So they're serious here. Like they're not, like I said, they're here to have true price discovery in uranium. And so they're going to continue purchasing uranium, and they want to be listed on the New York Stock Exchange. So that's hopefully going to happen around Q2 or Q3 of 2022. When that happens, then that's going to give them access to a lot more capital. The New York Stock Exchange is 13 times bigger than the Toronto Stock Exchange. So if they were able to kind of raise 3.5 billion just on the Toronto Stock Exchange with their Canadian vehicle, it's kind of safe to assume that they're probably going to raise at least the same amount, once they have the New York stock listing. So they're going to go get another 3 billion, probably. That's reasonable to assume that, in terms of conservative numbers. So that allows them to purchase a lot of uranium. And so that's going to bring about true price discovery. And as I've said, what we found out is that they were surprised at how quickly the price went up in August. And they were also surprised at how thin the spot market was. So there's not a lot of material out there. So they had to kind of find other ways to obtain uranium, which they did. And it caught everybody off guard, myself included, because when we saw that the price was rising, and equities was like, it was a fun ride, August, September there. And then all of a sudden, they're announcing that they're still purchasing uranium. They're increasing the uranium in the fund, but the price of uranium is going down. That didn't make sense to me. But then, go ahead.
Yeah, do they have to sell this stuff back? If people were to sell their fund, do they have to sell and offload this stuff back into the market if people were to unload those positions?
That's a good question. They've stated multiple times that that's not the goal. So they want to run this uranium fund just like they run their physical gold and their physical silver and their physical gold and silver. They've got multiple physical funds that they run, and what they do in all of those is they don't sell back any of the material. They just hold it. That's the purpose of the fund. Now, when there are redemptions at some point in time, it's either some people selling their units, or they would have to pay out cash to, so that these people can refund their unit, redeem their units. So they need cash on hand in order to do that, in my understanding. So the answer to that question is no. They're not supposed to sell. That's not the goal of the fund. However, at some point in time, like if there's a huge shortage and there's a problem or whatever, like they might have to, or they might want to. But right now, that's not what they're indicating to the market.
Okay. And just way out there question, it's way out there. Is there any way that a government or an entity could stop them from purchasing it because they consider uranium a strategic material or something on the lines of that? Is there, I know it's out there and I don't know if people thought about it, but, or force them to release the holdings that they have?
Yeah. Well, that's a good question as well. There's a lot of speculation on that. However, I don't know the answer to that question. Like, I mean, who knows what governments would do? Like they could do. I imagine in a specific scenario where there's an extreme shortage, and there's an energy crisis, and it's in the public's best interest to have access to this material, strategic material. I don't see anything stopping a government from saying, hey, hand over your uranium. Now, at the same time, in a free economy where all kinds of things happen, we don't see this kind of thing happen very often. I don't think I've ever seen it happen. But is it a possibility? I guess so.
And Sprott they're located up in Canada, right? The Sprott fund where they hold this stuff, Or
Right now, the fund is listed on the New York, on the Toronto Stock Exchange. They have, I think their headquarters are in the United States, but they have an office in Canada as well. But they have two listings on the Toronto Stock Exchange. It's the same fund, but one of the units is in Canadian dollars, and the other unit, and it's a different ticker symbol, is in American dollars.
Okay. Okay. Do you have anything else? Because that's all the questions that I had for today.
No, just the last thing that which I was saying with regards to split was when the price of uranium started going down in October, when they were still buying, I couldn't understand that. But now, after learning that, they were surprised at how quickly the price rose, learning how little material there was on spot, learning that they've managed to acquire pounds without needing always to go to the spot market. It makes sense. It makes sense that they've taken the foot off the pedal. They don't want to alarm utilities. That they want to be listed on the New York Stock Exchange. Then we learn that they've acquired North Shore Uranium ETF, the URNM, and they're going to take control of that in February. Everything makes sense now. Let's take the foot off the pedal. Let's wait till we gain control of this. Let's get our clients in this. Then let's list Sprott on the New York Stock Exchange, and then so I think we might see some more kind of sideways bottom bouncing until these things are sorted out here.
Okay. Okay. And how do people reach out to you? Do you have a Twitter or something like that?
I'm on Twitter, so at Terry Pepino 2. So, and people have direct messaged me, and when I can, I respond.
Okay, I'll put that in the description below. Your Twitter handle. And you know what? Thank you for coming on. I really appreciate you taking the time to spend on the Finding Value Finance channel. I'd love to have you back and get updates every once in a while on what your thoughts and opinions are. And I really appreciate your time.
It's my pleasure, Andy, and I would love to come back anytime.
Okay. All right. Well, thank you.